Palantir is an extremely fast-growing company whose AI technology has the potential to disrupt both governments and private businesses. And in this video, I'm going to be doing a full breakdown of both the company and their stock. Palantir just reported their latest earnings for Q1 2021, and they managed to increase their revenue 49% over the past year while maintaining margins of 34%. They have also taken a lead in using AI technologies to supplement their unique brand of data analytics and data integration. But at the same time, they have drawn criticism for having an overvalued stock price and for their high levels of stock-based compensation that dilute the stock, caused by the several $100 million in stock-based compensation that they issue each quarter. Hey everyone, and welcome to FinTech. And in this video, I'm going to go over the background of Palantir as a company, what they do, as well as how they have been performing based on their most recent earnings reports. Finally, I'll take a look at what it will take for Palantir to succeed going forward and whether or not I personally have invested in the stock. I ended up reading through Palantir's entire earnings call transcript for their most recent earnings report, and it is not short. So if you appreciate that kind of effort, all I ask in return is that you please hit the like button, and with that, let's dive into Palantir's background as a company. Palantir was founded in 2003 by 5 co-founders, perhaps most notably Peter Thiel, part of the PayPal mafia. This was a group of high-profile entrepreneurs who all got their start revolutionizing the financial payment space, and Thiel still serves as the chairman of Palantir. They IPOed in September 2020 at an initial valuation of $18 billion. They then proceeded to drop in value all the way down to $15 billion before peaking at $64 billion in January 2021. As I am filming this video, it's still down from its all-time high at around $18.56 a share and a market cap of just over $35 billion. Palantir first got its start working with government organizations, including the CIA and other national security organizations. They later branched out into other highly regulated industries, including finance and healthcare. In fact, in 2009, the Securities Investment Protection Corporation used Palantir's technologies to help convict Bernie Madoff in the largest Ponzi scheme of all time. Today, Palantir still has a very large customer base in the government, and we'll see a little bit later just how quickly that market is still growing, but they've also made major inroads into private businesses, especially over the last year. They currently have 3 major products: Gotham, Foundry, and Apollo, and we're going to need to get into those a little bit before we start looking at their earnings, because these products will help define both how they're currently performing as well as act as a guide for where they're going to go in the future. If you saw my last video on Palantir, you'll know that this product lineup is slightly different from the one that I talked about in my previous video. This is because their 4th product, called Metropolis, which is used for quantitative analytics mainly by finance companies, is no longer being actively marketed by Palantir. While there are some finance companies that still use this software, mostly it's been replaced by Foundry and Gotham. So first off, let's talk about Palantir's Gotham platform, which is used for integrating, managing, securing, and analyzing all of your enterprise data. What this means is they gather all the disparate data from different parts of an organization like a government or a large company, and they set up rules for where that data should go. I actually received a useful comment on my last video from Ramsey B, where Ramsey explained that Palantir operates in the field of metadata, which is essentially data about data. So let's just imagine Amazon as an example. Amazon might have a bunch of data on what items their customers have tended to buy in the past. They might have a separate data set with all the different items that are for sale on Amazon. All this different data across the company can be combined into a data lake, which is basically just a dump of all the different data types, or it can be organized into a data warehouse, which is a very well-structured collection of all the different data across the company, where it came from, what it's used for, and what connects to what. This well-organized metadata lets companies perform analytics that they never would have been able to do when their data was separate all around the company. So for example, let's say Amazon wanted to look at all the items that one customer bought and then run that through a recommendation engine to provide new recommendations for the customer. Well, while doing this, they might realize that they actually have a couple missing products on their platform which they could be selling to the customer. And they only know that because all the data is integrated in one place. So Gotham handles the data wrangling part where you have to get all the data into one place, but then Foundry is Palantir's other product which actually does the data analytics. Foundry lets you experiment with different types of analytics, track which experiments you've run in the past, as well as share all the different insights you've generated, as well as the actual process that you use to create those analytics across your organization. This way, if somebody in the finance department makes some kind of interesting analysis, someone in the products department could use that same analysis. Now yes, a company probably could go out and build this for themselves, but Foundry also comes with a whole bunch of pre-built tools that can make it a lot easier for non-data scientists to run analytics. So then the last product that Palantir is currently marketing is Apollo, which is their continuous delivery at the edge solution. So imagine you're in the military and you're deployed to some remote site and you need to run analytics on something. Well, Apollo can allow you to update your software even if you're in the middle of nowhere. They say it can be used from the back of a Humvee to the hull of a submarine. And this is an obvious and really necessary differentiator, especially for defense clients. In fact, when you put all these different products together, there really isn't another company that competes in quite the same way that Palantir does. You have companies like Snowflake that can provide data housing and analytics solutions. You have Alteryx, which can help with data ingestion from multiple sources and for non-data scientists to execute queries. And there's plenty of government contractors that all know how to handle sensitive information. But put all those requirements into one, really only Palantir fits the bill. But all that is just the story of Palantir and why it's valuable. But next we need to look at the numbers to see if they back up that story. Looking now at Palantir's most recent earnings, their revenue grew to $341 million this quarter, an increase of 49% year over year. This has been largely driven by growth within the US, which increased 81% year over year. This growth in turn was kind of a mix of both government growth and private sector growth. The government market grew at 83% in the US, while private businesses in the US grew at 72% year over year. On their earnings call, they explained that one of the reasons for this huge increase in government spending on their platform was because of their response to the pandemic, where Palantir's products were used both during the initial response and they are continuing to be used in the government's response today. Palantir generated $151 million in free cash flow, which puts their adjusted operating margin at 34%. Now the key word there is adjusted. One of Palantir's biggest expenses is compensation for their workers. The reason for this is right now, in order to get Gotham and Foundry installed on a new organization, Palantir has to send in a whole team of engineers to wrangle with the data and get it all into a format that will actually work for their platform. This is a super labor-intensive process and it's a pretty high-skilled process too, so the kind of people they're hiring are expensive. This has resulted in them paying out huge amounts of stock-based compensation, which is not counted as an expense in the adjusted operating margin. In fact, if you did account for the over $194 million in stock-based compensation that they issued last quarter, Palantir is actually losing money and they have negative operating margins. In fact, during the conference call, the CFO mentioned the rule of 40, which is a rule that's often used to value software companies. The rule of 40 is basically where you take a company's revenue growth rate and you add onto it their margin. The goal is that these two numbers combined should be at least 40. The CFO was kind of bragging in this call, saying that when you add their 49% revenue growth rate to their operating margin, they were way above 40. But this isn't really true when you add in the stock-based compensation. In fact, if you subtract out the stock-based compensation when you calculate their margin and then you add that to their revenue growth rate, it comes out to 16, which is pretty far below 40. Now, management does say that this stock-based compensation is pretty necessary to hold on to their workforce, and that makes sense since they're hiring a lot of pretty highly technically skilled engineers. But at the same time, you can't scale your business if every time you want to generate more revenue, you just have to pay more of that money out to your engineers. Palantir is going to need to introduce more automation into their solutions in order to eventually become profitable. We'll talk about how they're using AI to accomplish this a little bit later, but first let's finish going through their earnings. Billings grew 248% year over year, and remaining performance obligations grew 129%. This is a good sign that Palantir is booking both longer and larger contracts with their customers, and it should be a good source of revenue continuing onward from here. Additionally, looking at Palantir's total addressable market, they still have a lot of room to grow. They noted on the call that they only have a handful of customers in the Fortune 500, and they only make up 0.1% of the defense spending in the United States. Additionally, they are starting to expand more downstream into smaller businesses. In fact, their active commercial pilots doubled over the past year. Now, these small pilots don't really generate any revenue by themselves, but hopefully once they use Palantir's products and get hooked on them, they'll be able to buy more and more of those over time and start generating appreciable amounts of revenue. Now, getting back to that AI point I made earlier, Palantir needs to find a way to automate some of the work that its engineers are doing. The problem is, the reason you hire engineers is to solve hard problems, and that's really hard to automate using software. One of Palantir's answers to this problem is Apollo AI, their AI service built onto their continuous delivery platform. They claim that this service can replace a year of custom integration with a few clicks in just a few short hours. They also claim that this is the most sophisticated operational AI, and it is just steps short of Skynet. Skynet. Skynet being the AI that takes over the world in the Terminator movies. That's interesting because in a few other parts of the conference call, they also made some pretty wild claims about their AI capabilities. They claim to have a proven track record of seeing around the corner, an ability that feels almost mystical. They also talked about a company that they were investing in called SOAR, which was working on building an exoskeleton similar to Tony Stark's Iron Man suit. And they said Apollo AI was Jarvis, Tony Stark's digital assistant, but in real life. So I talked in my last video about Palantir's earnings call and how it felt kind of more like a performance than a normal earnings call. The whole thing almost feels more like an advertisement for Palantir than it does just a normal update to their shareholders. But in this particular case, it almost seems like they're going a little bit too far, because what they said about their AI just isn't true. Palantir made multiple comments that seem to indicate they have some sort of generalized AI that they can just point at problems and it will solve them automatically. I do not think that is true, because if it was, they would very shortly be in charge of all world governments and probably take over the world. To explain why I think that, let's take a quick detour into the technology of AI. So AI, as it is referred to today, can kind of be a bit of a buzzword, but there are several categories that fit under that broader umbrella. You can loosely define it as any sort of system where through continual training, it can get better and better at recognizing a pattern. So a voice assistant gets better at translating waveforms into a person's intent. Computer vision systems can convert pixels on a screen into objects. Google's AlphaGo program can get better and better at playing the game Go. What's common about all these different types of AI is they are very specifically focused on one area. AI is really good at discerning complex patterns when pointed at one specific area and trained on that one thing, but they're really bad at generalized intelligence. So sure, I could make an AI that's super smart at one specific job, let's say recommending YouTube videos to you, but that same AI wouldn't be able to play a game of chess, it wouldn't know how to recognize speech, and it couldn't do anything that it wasn't specifically trained to do. We even see Palantir indirectly acknowledging that this is how AI works through their new micro models architecture. Basically in the same way that a lot of modern applications are built using microservices, which are services that just do one small thing, and then all those small individual services build up into one full solution. In the same way, micro models are essentially AI models that are really good at one very specific task, and then you'll just put a whole bunch of those models together to achieve some broader goal. So basically, there seems to be a huge disconnect between what their leadership is saying on their conference call and what is technically feasible in AI at this point. So why exactly are they talking in what I feel are really misleading terms about their AI? Well, it's hard to say exactly, but for the most part, I think it just comes down to marketing. They don't really view their shareholders as the boss that they're just reporting their earnings to. They view their shareholders as new potential leads for their business. And it makes sense. They now have over 1.5 million individual shareholders, and they even mentioned during the conference call that they've seen several leads into new businesses because their shareholders are bringing them into the companies. I could go deeper into how I see Palantir using business decisions primarily as a marketing tool, including last quarter when the CEO announced that they would continue to grow revenue guaranteed at 30% through at least 2024, and the fact that they're investing in an eVTOL company that makes electric vertical takeoff aircraft, as well as Sarcos, which is literally trying to build an Iron Man suit. Both of these companies are obviously the type that could generate a lot of coverage on both social media and in the normal news, so it's great marketing for Palantir. But honestly, aside from being a little bit misleading, the earnings call was overall very positive for Palantir. So going forward, there's going to be a few things that we need to watch for from the company. One, we will hope to see their stock-based compensation growth slow down, or at least not increase as quickly as their revenue is. As Palantir is able to introduce more AI into their software and slowly start to do less and less manual engineering work, this should hopefully improve their margins and drop their cost of labor. Two, we will hope to see them start to grow more into businesses outside of the US government, especially smaller businesses where they can actually build their core business on top of Palantir's technologies, and then that platform can just grow with the company over time. Third, we will need to continue to view some of the claims made by leadership with a little bit of skepticism and follow the numbers rather than just taking what they say at face value. I personally have not bought into Palantir, mostly because I think there are some better opportunities out there, including investing in Cloudflare and Snowflake, who both have it much easier in terms of the ability to scale their business because they're not nearly as labor intensive as what Palantir does. At the same time, if Palantir is able to move toward a more automated business, their growth is going to be absolutely explosive, and I'm sure the stock price is going to do extremely well. Currently, the stock price is up slightly after earnings. So let me know if you personally will invest in Palantir based on these earnings. Don't forget to like and subscribe if you enjoyed the video, and I'll see you next time.